just going to be sharing the 5 different strategies that I think you can only fall into. The first one is trend trading. This is where you're trying to get into the trend and just ride the wave. Just the bandwagon, everybody's moving north, and you try to hop on that and move with them. So this is great because you have the momentum on your side, and you can get really good profit taking on that one. The problem is, what if you get in too late? What if you get in and people decide, you know what, I'm done. I've gotten mine, so I'm out. Or you can actually get in too early. You can think the market's getting ready to change, and you end up getting in too early, and it doesn't. The second one is some sort of mean reversion. So when you look at the charts, especially in Forex, price doesn't go up in one direction or down in one direction the entire time. It moves in waves. And so when you look at the market and it looks like it's just stretched out more than it can handle, then you want to get in. And you treat it like a rubber band. So when you stretch a rubber band and let it go, it snaps back really quickly. And that's what you're trying to capture. The third type of trading that I've traded is breakouts, in which case you see a market that happens to be stuck within a range, and during that time you're waiting for the price to break out, because generally when it breaks out it moves really well away from that area, and so that's what you're waiting on. The problems that you can run into on that one is just fake outs. Price breaks out barely and then immediately comes back into the range and either consolidates, stays within that range for a long period of time, and now you're just stuck in that trade, or it actually goes the other direction, which is a common thing that happens. You'd have to get on the charts to see. The fourth trading style is scalping. This is when you're trying to capture small moves within the markets and you're trying to get in and out really, really quickly. I've tried to do scalping and I can see how it would work. The problem that I've run into is having an account that allows you to do that based upon leverage and spreads and commissions. So it's not easy. It does require quick, fast-paced decision making as well as execution. And that was not something that I was ever really good at in the live markets. On the backtesting markets, I was doing really well. Backtesting, you also have a little bit more time to be a little bit more selective on your trades. Live markets is a little bit different, and so I could not transpose my backtesting results to my forward testing in the live market, so I've backed away from that one. The last trading style that I would say is swing trading. Swing trading is on a higher time frame. It uses you can be into the markets for days, if not weeks, sometimes maybe a month, and you're looking at a medium to a long-term move. This works out really well for those who don't want to be on the charts that often, that don't want to take majority of their time out of their day to monitor the charts, and it makes for really easy for somebody who works a 9-to-5 to do it. The general thing that you might run into with swing trading is you generally don't make profits that quick if you are doing it in a conservative manner. If you want to take a more risky approach, understanding that you have to have some sort of risk management in order to make it work, you could, and this would be where people like Nick Sean come in, and he trades high risk to grow an account really quickly, make withdrawals, and then start over again, knowing that at some point in time he could blow an account, if not 2. But if you've grown 2 or 3 accounts to double, if not triple their account size, then you still end up with a profitable system. So that's one way to make swing trading grow an account quicker, because generally swing trading will be one of those slow churning machines that just incrementally builds your account instead of something fast paced like scalping. Scalping could quickly grow an account because you're taking many trades back to back, and you can grow it. You have the possibility to grow it faster. Understand the risk of any one of these trading strategies. You are just as likely to lose money as you are to win money. By all technicality, you're more likely to lose money than you are to win money, just because a strategy by itself isn't enough. There's a whole lot more to it that you have to put into it as far as psychology, risk management, emotion handling. So no strategy is successful on its own. It takes the trader to make the strategy successful, which is why in this field, any strategy can work. It depends on the trader who is using that strategy that makes it work. Most traders struggle with the discipline and the mindset. And so that is a strong area of focus that if you want to be successful, you should get into that. Understand psychology, understand your own psychology. If you think I missed one of the different types of strategies, let me know in the comments, because maybe I have. Maybe I've tried it and I grouped it into another one, or maybe I've never tried it and I'm willing to try it. I've come to the point where I understand mindset is more important than the actual strategy. With the right mindset, you can be successful regardless if you use one strategy or many strategies. The mindset is what is going to tie everything together, as well as find your profitability in it. The consistency to be able to come back over and over and over again, knowing it's a numbers game and you have to play the game in order to win.